This is the third part to the three-part series that I've done on using the TTP software in spot Forex markets. So what I've done here is I've built out the Bloodhound template, which is accessing all of the areas from all of the charts using the toolbar, the market geometry areas. And the only difference is with the spot Forex, again, just to kind of recap what we've talked about so far, is the fact that we're using total number of transactions, total number of ticks, instead of the true volume. And the thing that I've noticed with the different data feeds, using either IQ feed or FXCM, is how they are showing the values of the ticks. So it seems to me that we're using faster tick charts for FXCM and a little bit slower for the IQ feed. And I don't know, really what the difference is between the data feeds, but it seems like we're getting more ticks from IQ feed as opposed to the FXCM data feed. So the only thing that you may have to change would be the size of these two tick charts. We're using the 144 tick with FXCM as the faster time frame, and then the 576, which is simply 4 times the 144 for the kind of medium time frame. Essentially what we're doing is we're trying to somewhat resemble in total number of bars for the regular trading hours, let's say the morning session, the 2-minute chart. So we're trying to get this 144 tick to have a similar number of bars to the 2-minute chart for the morning session. And for the FXCM, this seems to be pretty close, 144. And then the 576 for the 5-minute. Okay, so just to kind of go over what's going on here, we are requiring that there be volume divergence on either the 5-minute or the 2-minute, and 3 areas in the market geometry, at least one from the faster time frames, one from the medium time frames, and then one from the slower, larger time frames. Okay, and what we have here, this is the most recent example I could find, is the high in the euro today. So all I've done is I have connected from swing high to swing high. That's given me this baseline right here. And I can show you how we're accessing that through the toolbar, through an indicator that reads all of the lines that the toolbar produces. And that would be this solver. So we're highlighting every single bar that is touching one of these lines. And that's using this reader indicator, which allows us to access the values of all of these lines. And we're reading that from the 2-minute. So if you had to change one of these tick charts or both of the tick charts to a larger number or smaller number, you would make those changes on the chart and then simply come back to where we have the 144 tick labeled and then find that chart in the drop-down. And of course, there are videos explaining how to do this in greater detail. So it'll show up here in the list, and then you simply select it and then click OK. Okay, so let's go through all of the different areas that are coming together at these highs. So first of all, we have volume divergence from the 5-minute chart up here. We also had it right here, but that's not showing up on the 5-minute because it was essentially eliminated on the same 5-minute bar, but it is showing up on the 2-minute. But here we have the volume divergence on the 5-minute. We're very overbought on the VWAP. We're up above the 3rd standard deviation. I know you may not understand what that is, but this is the volume weighted average price. And instead of volume, we're simply using total number of ticks. So we're essentially very overbought on the session. We're touching that upper baseline, that trend line from high to high. And then we'll just work our way back. We'll go to the 144 tick chart now. And using the same swings, we're also touching the high perfectly up here on very strong bearish divergence into that high. You have very high volume per second right at the high, which is the highest on the day, very high volume per second to end that move. And then let's go to the larger tick chart, the 576. And here I've connected from low to low. And I can just erase that and show you how we draw that in. Very simple. it finds the high automatically, and then we have a perfect hit of that upper channel line, what we're calling the auto line, since it's drawn automatically. And then let's go to the 5-minute. Here you see volume divergence on the 5, and I can also sync all of these charts together so that we can scroll and have a kind of synchronized scrolling system. If you know anything about Ninja's global crosshairs, you know that they're kind of problematic, a little archaic. So what we can do is we can link all of these charts together, and then as I scroll over here to these couple of bars into this high, all of the charts will then be synchronized to this exact point. Okay, so what I've done here is I've connected from the penultimate low to the ultimate low. I'm eliminating that wick, which then enables us to find these higher lows, which is how we consistently do that every day. And you can see we've come up to the upper median line here, pulled back to the shadow of this channel, which is our little kiss goodbye. And then we come up to where both time and price meet both of these warning lines, the warning line of the channel, the warning line of the median line. And that's where we get the reversal. So now we'll go back to the 20-minute, which is here. And you can see we have our down-sloping upper median line coming in right here. And the next version of the toolbar, 3.0, you'll be able to elect whether you want to use the widest excursion swing, which is this point, or the lowest low between the two highs that you've drawn from. So here I've drawn in a regular set of median lines. Let me just hide that. And I'll draw it again using Ninja's standard median line tool or pitchfork tool. And I'll draw that from high to the lowest low and then back to this high. And you can see that gives us a more accurate kind of to the tick area for that upper median line. Okay, and you'll be able to elect whether you want to use that widest point or the lowest point in the next version. Okay, and then let's go to, well, first of all, you also have a buying climax into this high as you're coming back into about the midpoint or the 61.8 of that move out of the report, the jobless claims. Yeah, that's the 61.8 there. So beautiful area. Now we'll go to the 240-minute chart and the hourly and see how everything else comes together at that swing high. And of course, here we have our nice little ABC correction, and we're coming back to the high of this channel. So if I would have drawn this in automatically, it would have drawn from this high. Okay, and again, in that next version, you'll be able to elect whether you want to bring it down one or back one using any of these other swing points. And then all the sliding parallels will also be accessible within Bloodhound. And then on the 240-minute chart, just using the same area, you can see we've had that perfect hit of the upper median line and then reversed down. Now on the 2-minute chart, going back to the 2-minute chart, is we have all of those areas coming together at this high on volume divergence on the 5-minute, huge extreme spikes on the 2-minute. We have a buying climax as we're breaking above the prior high, and then we have two narrowing range bars, the first of which is a churn bar, a very large churn bar, and then we roll over. So that's the entry bar right there as we come up into that high. You could have gotten in on the first bar or waited for a hit of that 2-minute trend line, which would have given you a much more accurate entry. But you can see as we're coming up into that high, we have a pretty clear set of 5 waves up. So if we shorted this, we would really be expecting only to make it back to the 4th wave low, right? We wouldn't be expecting to come down and break below these lows. If this is a true 5-wave pattern, we would be expecting to put in a higher low and then work our way back up, which is what we've done. You could have gotten out on a break of that 4th wave low or a touch of the warning line or waited for divergence on one of the tick charts or on this 2-minute chart. And you can see on the 5-minute, we also have a pullback to the midline of this channel. Now, if you would have elected to use the extreme low there, then you will have a pullback right to the median line, as you can see here. And it's been working its way up ever since. Okay, so that's kind of how everything comes together to give you very, very precise signals directly on your 2-minute chart. Okay, and you can see now we've also come back into multiple areas on all of the charts, most of the charts, and we're now getting another sell signal. We could potentially move down from here. In this case, I would probably not try to trade this, as I think it's likely going to just give us a small pullback and then potentially move higher. So this is probably one that I would avoid trying to short, as we don't have as many of the larger areas causing a major reversal. This is more of a, we've had the main reversal down and we've simply retraced. So this is not, as good looking an area as I would prefer to trade. So that's a wrap to this little series on using the TTP software in Forex. If you have any questions, simply write us to support@trade-the-plan.com and we'll get back to you as soon as we can.